Morning, Fractal Effects team. Please make sure you read the disclosure before we get started. If you're following along with us, please make sure it's in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Let's jump onto the charts. So we got oil over here, US 30 on the right. Just waiting for any other confirmations to come through. So we're up against the blue zone. It's a big blue zone. We have a upside expansion model with US 30 much lower than London session. So we're bouncing off the fair value gap, the NYC fair value gap. We have a green box, but now if we take a fib, from high to low, we'll see that we are currently sitting right in that golden zone. Today is Thursday. Thursday's footprint brings us back to our weekly range, which I believe we're sitting in. There is the bottom of it, the aqua line right here. I'm not sure. I believe it's up here. There's the top of it. So we're sitting, we actually did fill in the weekly range, but we are bouncing off the top of it again. Just waiting for a confirmation. Oil just confirmed, or is getting ready to confirm, I should say. 2 minutes, 28 seconds left. So with oil, we have a downside expansion model with the New York session sitting above Asia. This late in the game, we're well above the blue zone. We have a fair value gap here that never came back and tapped, and sitting right on top of the blue zone. I don't know if we'll get that deep of a retracement. Crossover here, we had one tap. So there's our NYC fair value gap and our 20. I want to see it come down, tap any of this area, and then head for the top of the weekly range. US 30, even though we have a green box, and as mentioned before, we have an upside expansion model, we wait for that confirmation because we're right up against all this resistance. That blue zone is a very, very strong area. That's why the price rejects off of it and or is drawn to it. Market dropped, hit the bottom, came right back up. So we're sitting at a lot of confluence here. There is the weekly range high, there's your blue zone, and here's your New York fair value gap. We'll just have to wait and see, waiting for confirmation. So we have two strategies on top of each other. And keep in mind, the reason we wait for that confirmation is the second we get it, that means there's an 80% chance that the bottom of the range will not be broken. For example, if we got a bullish confirmation, that means the 80% chance the bottom will not be broken. So even if we have a bearish bias going into this before that confirmation now just dropped our probability. So you can't have a 70% probability that this thing's going to drop if there's an 80% chance that it's not going to break the bottom of this. That's why we wait for that confirmation. That's how we pair these two strategies together, especially this late in the game. Remember, the blue zone strategy is for the time period starting from London all the way through into New York Open. But once we hit 10:30, then the spotlight strategy takes over. Oil, on the other hand, getting ready to confirm again. Just going to get rid of all this. There's drawings in the way. So again, we have a lot of confluence here. There is the top of the weekly range. We're well above the blue zone. It bounced off the purple zone. I see this thing going up. I just want to see a bullish confirmation, and then we'll see if we can't jump in for an entry here. Again, if you're following along with us today, make sure you're doing a demo account. Practice, practice, practice until you're actually good enough to do this market analysis on your own. This has to be your bias, not mine. We're just here to teach you. Right now, US 30, making a swipe up. So we're at that blue zone again. There's London's fair value gap. London's fair value gap lined up right at the consequence encroachment of the blue zone. This is how strong the blue zone is. The market dropped right under it, tapped it, dropped all the way down to the weekly range, came back up right to the midpoint of it. And now let's see what it does here. One minute left. I want to get this oil confirmation. So there's the New York fair value gap. We could go as deep as that, but right now this is our fair value gap of interest. So since we had the crossover down here, oil didn't really touch the 20. So I want to see it come back, touch the 20. And if the 20 is sitting here at the time, that's great. If it's up here, that's fine. Right now, New York gave us a breakaway gap. Anytime the opening, I should say that's a late one. Here's the opening right here. And we did tap it one time. So once the 20 comes up, if it comes up here, that's where we'll take it. There's a lot of confluence here. Bottom of the weekly range. And if the 20 can come up there, we have a fair value gap. We have the 20, that's more than enough. And then we'll drop down to a smaller time frame and look for an entry. As far as US 30, I want to see if it punches through here or if it rejects off the blue zone. Right now the blue zone's giving us a sell. Remember, if you don't know how to make up your mind as far as the daily bias, or the session bias I should say, right now we have a sell model. We have a upside expansion model. Our daily candle bias, meaning we look at the previous day's candle. Did it break the high or the low of the candle before that? It did not. It closed within the range. Excuse me, give me 1 second here. Sorry, just dealing with a cough. So we did not break the high. So our bias is bearish on the daily. Now we drop back down to the 5M. That's bearish. And now we just look to see where the New York manipulation move was. There's the low. So it's to the upside. So everything is kind of giving us more or less bearish sentiment. Excuse me 1 second. So we have 3 arrows now pointing to the downside. And we've already filled in the weekly range. So if we get a bullish signal here, we're going to have to either pass on this, or we're going to have to see more confluence after that. Because right now, the story's saying this thing wants to push down. Oil still the more interesting pair, even though it has not confirmed yet. Some confirmation on either pair. No other confirmation so far across any other pairs that we're watching. Just gotta be patient. No confirmation on oil. I'd like to see it pop up, give us that confirmation, but it's giving time for the 20 EMA to slowly make its way up into this fair value gap of interest. I really don't think the market wants to close below this. I don't think we'll see a candle closing below bottom of the range. Maybe a dip, touch this, tap that, and then head up on its way. So we'll just keep an eye on oil for now. So now we're back at that fair value gap. But again, we have no confirmation yet. That means we could get a deep retracement. So if this touches the 20, that means that once we confirm, it could move fast. It'll just tap any fair value gap that's closest to it. But I want to see how it reacts here. A lot of points of confluence here. Sadly, if we had this bullish confirmation, that would have sealed the deal for us. Because right now we do have a downside expansion model. So we have a downside expansion model with New York session much above Asia. But it could retrace all the way back down to the purple zone. That's why that bullish confirmation is golden. US 30 having a hard time getting above the blue zone. Still no confirmation. If we get a confirmation on NAS, for example, we'll jump in over there. Right now, no confirmation across any of the indices. Yeah, until oil touches this 20 EMA, not interested. US 30 stuck right at London's fair value gap. There's the top of the weekly range. It's got a lot of rejection points here. Top of the weekly range in that aqua, if you can see it right there. You have your blue zone, you actually have two blue zones, one inside the other. London fair value gap, and you have a downside expansion. No, actually, sorry, there's an upside expansion model. That's what we had here. And we're sitting right at the golden zone, a little above it. No confirmation. Here comes oil, back into this fair value gap. Want to see it touch that 20, give us a bullish confirmation. So we are green across the 1, the 5, and the 15. And the daily. That's more than enough confluence for us. A bullish confirmation would have sealed the deal. US 30 again dropping. Lot of confluence there. It's a lot of resistance that it's got to get through. Now we're back at the New York Fair Value Gap. If this thing drops past the New York Fair Value Gap, pulling the EMAs down, and we get the 1M turn red, this thing might push all the way down. Because right now, majority of our bias, as we've outlined here, is bearish. We have one upside expansion model. The rest of it, we have a sell model. We have a daily candle bias of bearish. And our manipulation move, our NYC opening manipulation move, was to the upside. For those who are not familiar, NYC usually does a manipulation move in the morning, and the indicator will paint out that area for you. The blue zone indicator paints that out for you by creating two skinny green lines. There's one right there, just happens to be overlapping with the bottom of, or the bottom of the weekly range. And then the top of the manipulation move, I think, is stuck somewhere here. Hard to see. Oh, is it up here? Oh, sorry, it's over here. So that was the high of the manipulation move, that green line. And what this does, what this indicator does, it takes all the data that it has in front of it, and it decides where this manipulation move is most likely to take place. So between that zone, that green line, and this green line, whichever one is broken first is usually a false move to that side. And then when you pair it up with all this other confluence, it kind of helps paint that picture. So if we had a downside expansion model, this would have been a little bit of an easier play. So the market manipulated to the upside, created and then as soon as you see that manipulation, you want to see a fair value gap. It never created a 5M fair value gap here, and then it shot up again, and now this is the first 5M fair value gap that it looks like it's creating. Let's see if this sticks, because it could tap that and just continue pushing down. It could give us a bearish confirmation. And that's how these two indicators work in conjunction with each other. But those are the primary things you want to look at in order to decide what your bias is, right? It's all color by numbers. And again, the more confluence you have, the better. So as mentioned before, if this had been a downside expansion model, we had a red box, and we were red on the 1 and the 5, it just pretty much paints it out for you. That's all you really need to see. But out of these four, is it an upside or downside expansion model? Sorry, that one. So today is upside expansion model on the spotlight, but we have a cell model. And again, watch the Learning Hub to figure out exactly how to look at these colors, and figure out if it's a buy or sell model. We have a daily candle bias, which is bearish, and then we have a manipulation move to the upside, meaning it wants to go down. So that's a false move to the upside. So we have more candles pointing down than we have pointing up. But at the same time, we have no confirmation. So the second this gives us a bearish confirmation, it'll be a little bit more obvious. But for the people who follow the blue zone strategy and stick with the blue zone strategy even through spotlight, what they're waiting for is a red fair value gap to be created on the 5M, for it to be tapped, and then a 1M fair value gap to be created off of that. And they'll ride that down all the way to take out this low. A lot of straight lines right here. Remember, the market hates straight lines. It's just waiting to sweep that. So this is where it'll get interesting now. Right in this fair value gap. As far as oil, no confirmation yet. We're still waiting. Hasn't touched that 20. I haven't seen enough there yet. Goal is not to paint too many of these. Sorry, 1 second. My apologies. A little bit of a lag time there. Let's try it again. I want to see the market come back into this fair value gap and see what it does there. Now, me personally, as mentioned before, once the spotlight strategy and that range is complete, that's the only strategy I stick to. I play the blue zone strategy all the way until the range is formed. So for example, for oil, if I was looking at that, the weekly range was above us. But as soon as I saw we had a downside expansion model, let's work this one out too. Downside expansion model. But we actually have a buy model. We have a daily candle bias, I'm assuming, because we have a green up here. Let's just say it's bullish. We'll take a look in a minute just to confirm. And then our manipulation move in this particular scenario, there's the bottom of the range. I'm assuming the top of the range, excuse me, right there. So our manipulation move was to the upside, actually. So now we have two candles pointing up and two arrows pointing up, two arrows pointing down. That's a mixed model. But again, you start adding up other confluence. Weekly range, we know that Thursday returns to this aqua line. We know that we're green right now in the 1, the 5, and the 15. We're above the blue zone, above the purple zone. And we have a big fair value gap left open here. You always got to proceed with caution, though. That's why I'm waiting for that bullish confirmation. Top of that 20 EMA. And then heading for the top of that aqua line. US 30 did not come back into this fair value gap yet. While that's moving down, let's take a look at what the actual daily bias was for oil. Again, this is US oil on the left, US 30 on the right. We're looking at the CFD contracts, but the strategy works on futures, CFD, doesn't matter, stocks. So here's previous day's candle, and we closed below the one before that, actually. So this was the candle of interest. This one closed in its shadow, giving us a bullish bias, and then this one closed below it, bouncing off the 50. So we'll actually change that real quick. So our daily candle bias. So now we have more arrows pointing to the downside than we have to the upside. Now we need a bullish confirmation in order for me to feel comfortable taking a trade to the upside. Because that bullish confirmation then brings my probabilities back to 70%. Here comes US 30. I want to see it tap this fair value gap, and we'll see what happens. This thing might just push down. Now keep in mind I'm overlapping two strategies here. The blue zone strategy, anybody who's following that all the way through the spotlight would be looking for an entry here to take out these lows. I'm only using it just to dictate where the market could be going next, because we're just waiting for a confirmation, and we want our confirmation to align with everything. So the bias was actually bearish with all these arrows. We had more arrows pointing down than we had pointing up, right? We have 3 arrows pointing down, only 1 arrow pointing up. So if we get a bearish confirmation, that's going to solidify that for me. So there's another fair value gap that's been left open here as well. So I could tap either of these. I won't draw another one in because we already have our New York fair value gap running across it. That's just as strong, if not stronger. So see what happens here. As soon as it comes up and taps it, we'll drop down to a smaller time frame and see if there is excuse me, an entry to go short. I won't be taking this, of course, as mentioned before. This is now in the zone of the spotlight strategy, so I'm waiting for a bearish confirmation first, a retracement, then an extension. And I need it all to happen within that time frame. But for anybody still following the blue zone strategy, they're going to look for an entry either at this fair value gap or this fair value gap. Remember, once somebody becomes an expert, our place is not to dictate which strategy they should be following. It's whichever one they feel comfortable following. Both these strategies have been back tested. It just depends on what your rules are. So for us, we've set those rules on purpose. Once the spotlight strategy and that range is completely formed at 10:30 Eastern Standard Time, we only follow the spotlight strategy and we use the blue zone strategy as confluence to help us shape the range. So even if I don't use this, even if I don't take a sell here, the blue zone strategy is guiding us to tell us this might just confirm bearish. But we'll just have to wait and see. But we will follow the price as it jumps into this fair value gap. So again, US 30 here on the right. I want to see what it does in this fair value gap. As soon as it comes up, we'll drop it down to the 1M. Oil, no confirmation, yet it's still just gesticulating right around that area. All right, so we've tapped it. Now let's drop down into the 1M. Now in the 1M, I'm looking for a red fair value gap to be created. Keep in mind the indicator paints those out for you. You just got to keep an eye on them, extend them across. I'm not talking about this one, by the way. It's once you've tapped. Remember, hit a fair value gap, create a fair value gap. As soon as you hit a fair value gap on the 5M, you then want to create a fair value gap on the 1M. So we already have a crossover here. Already red on the 1. A lot of confluence here, so let's see how high it goes. So right now we are reacting off this red fair value gap as well. Let's see if this red fair value gap stays open. Nope. And this is what saves us from so many of these manipulation moves that the market makes. Right? We wait for this confluence for a reason. A lot of people get FOMO and they'll jump in before a fair value gap's even formed. Let's go back up on the 5M because we got time. It's not going to form anytime soon. See? So we tapped this fair value gap right here with this candle. But we did not create a 1M fair value gap yet. A lot of confluence here. We're under the blue zone. Here's the New York fair value gap, and now we have our first red, or rather our second red fair value gap, making this one a runaway. So it could retrace even higher, tap the midpoint of the New York fair value gap. We'll see. That's what keeps us patient. While we're at it, we might as well paint that one out actually. I don't want it to get too cluttered here, but just so we can see it on the lower time frame. That's the fair value gap. And we did tap the midpoint of it. So now we drop down into the 1M. Still no red fair value gap created though. Still no red fair value gap. Right up against the 238. Remember, until you see a red fair value gap on the 1M, this thing could continue to drive higher. That's why we look for that extra confluence. Could be forming here, 19 seconds left. We still gotta wait for one more candle. Remember, it's a 3 candle formation. 10 seconds. Meanwhile, oil coming back to the 20. So right now, I'm not interested in this because we have all the confluences telling us, or all of our arrows are pointing down. So until we get that bullish confirmation on oil, it could just cut right through here, go all the way down to the purple zone. That's why we want that bullish confirmation. The second we get that bullish confirmation, there's an 80% chance that it will not break the bottom. This is a 20-year tested, back-tested strategy. That's where those percentages come from. So now we're waiting for this this candle to close. So we have a fair value gap here. Let's see if it forms. And it could just use that, the bottom of the 238, and start shooting down. Got to wait for all this confluence. And if it leaves without you, that's fine. As mentioned before, we're teaching you guys all the skill sets to be in the markets, in every market. So there's the fair value gap. It's been created. Let's zoom in a little bit. A little hard to see. Every time we do a live stream, I don't know why it's hard to push these charts up. Creates a lag time for us as well. Just want to fix that fair value gap, make sure it's accurate. There you go. And again, if it leaves, it leaves. But that would have been the point of entry. We want to see a candle tap that, reject, engulfing candle, and then that would have been the blue zone sell-off. Here comes the market back up. Let's see if it comes all the way back into our zone. Keep in mind, this is not a trade that I'm interested in, as mentioned before. This is just to show you guys how to use the blue zone strategy. Stick to your rules. If your rules are follow the blue zone strategy all the way through, then that's fine as well. Remember, nothing's 100%. But for anybody following the blue zone, the early entry, that'd be the fair value gap of interest, rejection, engulfing, sell. And then when you go up to the 5M, what they're looking to do is sweep that bottom right here. Keep in mind this is the US 30 we're looking at here, CFD contract. And there's your weekly range too. Again, not a coincidence that it wants to sweep the weekly range. this aqua line, the manipulation move from New York Open, all these lows. And then if it gives us a bearish confirmation, then we're all in alignment with our confluence as well. Oil, pushing down still, now at the midpoint of that New York fair value gap. So it's already created another fair value gap here, so it could easily just tap that. This becomes then a runaway market where it could tap any fair value gap and continue down. But again, that one's still the strongest. There's a 238, there's a 20 right there. If the market just keeps running, it keeps running. The reason you want to avoid FOMO is because of the way the market works. Remember, it's not only psychology, it's reverse psychology. This thing could just push down another candle just so you think it left, so you enter there, and then it comes all the way back up to your point, taps it, and goes. So what would you rather do? Would you rather miss out in case this thing runs away from you? Or would you rather wait for it to come back into this range and not get caught somewhere here, panicking? Now you're stuck in a nail biter. If it comes up here, great. If not, that's fine too. Oil, again, still no confirmation. We're rejecting off the New York fair value gap, off the 20 EMA, still in this fair value gap at the bottom of the weekly range. But again, no confirmation. Majority of our bias is still bearish. So right now, the way things are going, I want to see US 30 confirm bearish, sweep those lows. And as far as oil, I want to see what it does at this purple zone. I think it could drop all the way down here. Again, if it shoots up from here, gives us a bullish confirmation, then we'll look for a quick fair value gap entry. But the fact that majority of our confluence was bearish, I need more. I need a bullish confirmation for this to actually be interesting. US 30 now, making one last jump back up into that area of interest for us. There's the 20 EMA, there's that fair value gap that we outlined. Also look at this. There is no fair value gap here. It's another telltale sign that this has already been delivered to. Usually what people, if you want to see a reversal, you're going to see it happening at a fair value gap. If there's no fair value gap here, it shows you that the market wants to push down. So what's the market do? Fill in inefficiencies or take out liquidity. So there is no inefficiencies here. There's some inefficiencies here. So it could take out this one, this one, this one. Then the question becomes, does it want to keep pushing down? So we've already tapped a fair value gap. Now it's tapping this 1M fair value gap. Hasn't quite done it yet. I guess it did. Sorry. That's why you got to zoom in, make sure. So the market could just drop from here. That's the US 30 on the right. Oil, on the other hand, still continuing to drop. So you want to see a rejection, and then you want to see an engulfing candle. And then the market will most likely drop from here. Let's see if that happens, or if we don't get that engulfing candle, I could tap here one last time and then push down. But for everything this thing is showing us, I think it wants to do a run all the way down to that green line that we've painted out. These gosh darn charts. There. 44,612 CFD contract. There's the rejection. 41 seconds left. Let's see if we get an engulfing candle now. Still not interested in oil. It's funny, sometimes you'll see all these points of confluence match up, but if it's against your bias, you gotta stick to your rules, stick to your bias, stick to your gut feeling. Will oil most likely push up from here? Yeah, good. There's a lot of confluence here. But my daily bias was all bearish. I needed that bullish confirmation first, and I still do. So until it cuts up above this and gives me that bullish confirmation first, and it could keep dropping all the way down to the 50 and all the way down to the purple zone. US 30, again, reacting off that zone. I want to see it drop from here. Well, the telltale sign has to be there. We need an engulfing candle. We are getting the rejection. Otherwise, as mentioned before, I could just do one last swipe up, tap this fair value gap, touch the blue one last time, then push. But let's see, it's having a tough time getting across this. Two seconds. Looks like it wants to do one last swipe up. That's why you wait for that engulfing candle. Oil still in that fair value gap. Oil's creating a green fair value gap. Let's see if this bullish fair value gap sticks. Three minutes left. close to 4 actually. There goes oil. And this might be our engulfing candle. 12 seconds left, let's see. There's your engulfing candle. We're back at the fair value gap. Oops, what happened there? Now the market could just start pushing down from here. As mentioned before, US 30. We want to see it sweep the lows, give us a bearish confirmation now. This late in the game, it kind of helps us solidify our bias. It's what we're looking for. If we don't get it, then we just stop trading. As mentioned before, oil. See, this is what happens when you don't get that bullish confirmation and the rest of your bias was bearish. You get another swipe down and it could go deeper. It could go all the way down here. Not saying that it can't come back up. Just saying as far as your entry, you want to make sure it matches with all your confluence. US 30, back at that fair value gap. I created a fair value gap here, if I'm not mistaken. Let's see. So I created another fair value gap right here. So it's making another swipe up. Remember, this is the day after FOMC, so the dust is still settling. This is a lot of manipulation happening here. Another reason you want to wait for that confirmation. So we've swept out these highs. You got your blue zone, you got this fair value gap here. I still see US 30 dropping past the lows. It's already filled in the weekly range high, and it's tapped the weekly range low, but it wants to push past one of these zones. Oil, again, continuing to retrace. deeper. Nothing of interest as of yet. So we're already past 11:30. I was hoping to see a push at least from the blue zone strategy, but my bias still remains the same. I think US 30, especially now that it's taken out these highs, we'll get some reaction between this zone. So you got a fair value gap up here, blue zone, fair value gap. How long it takes to drop, again, who knows? And that's where it gets, that's why we have this time restriction in place. If it doesn't happen during that time that you're looking at the market, you don't want to sit there all day. And then oil, as mentioned before, no bullish confirmation, still just retracing, could go all the way down to the purple zone. I still think oil will jump back up, but I think it'll react from down here in the purple zone. So you get a reaction off the 50 EMA and 72.93, around that zone. We'll conclude the session there. Please check us out on fractaleffects.com, where we teach high probability trading. Hit that subscribe button, turn on your notifications so you know when we're live. Currently, we are live Tuesday, Wednesdays, and Thursdays. So we will see you guys next week. Have a great weekend.